All right, welcome everyone to the deep dive. This is where we at Pantheon AI try to make sense of all the financial noise for you. Think of us as your information co-pilot.
That's right, helping you navigate the ups and downs.
Exactly. So it's April 10th, 2025. And let's jump right into the PAA morning briefing. What's the market telling us this morning?
Well, things look a little cautious out there. The S&P 500, it's sitting around 5328.77.
Yeah.
That's down roughly 0.455%.
Yeah.
Dow Jones also down a bit, around 39825.39, so down about 0.43%.
And the NASDAQ. Heard it was doing slightly better.
Yeah, relatively speaking, it's at about 624.73, only down like 0.06%, so almost flat.
Right.
And the Russell 2000, that's around 1858.63, down about 0.33%.
So a generally softer open across the board. And I saw crypto wasn't exactly rocketing either.
No, definitely not. Bitcoin is hovering around $81,157, give or take, but that's down about 1.72%. And Ethereum took a bigger hit, actually. It's down near $1,574.32, which is a drop of about 5.66%.
Wow. Okay. So this caution.
Yeah.
What's driving it? Is it that global growth slowdown we keep hearing about? Central bank nerves? What should our listener be thinking?
I think it's a mix of things. The briefing mentioned that global growth concern, definitely. And yeah, anticipation around what central banks might do next always creates a bit of uncertainty.
Like everyone's just waiting for the next shoe to drop.
Pretty much. Investors might be signaling they're just, tapping the brakes a little until they get more clarity on policy direction. There's this undercurrent of uncertainty.
And some of that uncertainty, it seems, is tied to political talk, right? Comments coming out of Washington, maybe?
Yeah, the briefing touched on that. There was that Wall Street Journal piece about former President Trump.
Right, I saw that. The comments about accepting some pain to avoid a worse downturn.
Exactly. He reportedly told advisors he acknowledged he could cause a recession, but wanted to avoid a depression, essentially willing to accept some pain. Now, we're not taking sides here, obviously.
Of course not.
But for you, the listener, it's about understanding how these kinds of statements, these potential policy leanings, can really impact market sentiment. It's a reminder of the weight these decisions carry.
It's insight into the kind of thinking that can move markets, regardless of who's saying it.
Precisely. And it's not just past figures. The briefing also noted current White House official Miran's comments on tariffs.
Ah, yes, the idea that the costs mostly fall on the targeted countries.
That was the statement. And, well, it certainly sparked debate among economists, hasn't it?
It always does. Who really pays the tariff?
That's the million-dollar question. It gets into international financial flows, how it affects domestic industries, the whole chain.
So for our listener, it's about watching how this rhetoric plays out versus the actual market response.
Yeah. Market strategists are constantly trying to map that connection.
Yeah.
It's complex. How much is noise? How much actually impacts the bottom line for companies and ultimately for you?
Okay, let's shift gears a bit. Let's look at some corporate action. Crisp acquiring Atheon Analytics and Clearbox Analytics in the UK. What's the story there?
Right. So this is interesting for you if you follow the retail or CPG space. Crisp is basically boosting its global retail data capabilities.
Making their data set stronger, more international.
Exactly. These UK firms specialize in that area. It points to this broader trend of data consolidation, companies wanting a single, powerful view of the global consumer. It helps them optimize everything.
Smarter data, smarter decisions, makes sense. We see that everywhere.
We do. It's about getting that competitive edge through better analytics.
Now, this one caught my eye. Pain Reform, the pharma company. Getting into smart energy with Deep Solar's AI, that feels like a jump.
It does seem like a leap, doesn't it? But for you, this highlights something really important: diversification and how technology crosses boundaries.
So using AI developed perhaps for drug discovery or something similar, and applying it to solar energy optimization.
Potentially, yes. Or just seeing an opportunity and leveraging a tech partner.
Yeah.
It shows pharma exploring the energy sector, maybe looking for new growth avenues. It blurs those traditional sector lines.
Fascinating. What other unexpected mashups are out there, you wonder?
Right. Makes you think about where the next disruption might come from, maybe for completely outside the expected players.
Then there's Xenotech, another acquisition. They're third in the Southeast, fourth nationally. They're really pushing hard.
They are. Xenotech is big into AI, drone services, SaaS, even quantum computing. This latest move really ramps up their drone as a service offering.
Drone as a service. So businesses subscribe to use drone capabilities.
Yeah, essentially.
Yeah.
For inspections, logistics, data gathering, all sorts of things.
Yeah.
It shows how vital drone tech is becoming across so many industries. For you, it signals a rapidly growing market segment.
Okay. Moving to energy and materials. Piedmont Lithium merging with Sayona Mining and rebranding as Alevra Lithium. That name change sounds very intentional.
Oh, absolutely. Alevra Lithium. It screams clean energy, battery
Yeah.
materials, right?
Totally.
So for you, this is a clear strategic signal. They're positioning themselves directly in that booming EV and renewable energy supply chain. Rebranding often helps capture that specific market focus.
Aligning the brand with the future, essentially.
Precisely. Especially in a hot sector like lithium.
Healthcare consolidation, too. Vital Hub, looking to acquire Induction Healthcare Group. What should listeners following that sector know?
This is another example of consolidation, common in health tech. For you, it means potentially stronger players emerging as they integrate complementary technologies.
Bigger companies, maybe offering more complete solutions.
That's usually the goal, yeah. Driving growth, maybe finding efficiencies through combining platforms or services. It impacts how healthcare might be delivered or managed down the line.
And quickly, those Invesco filings on Qualcomm and Aviva. Routine, but important.
Yeah, routine in a sense, but crucial for transparency. For you, these disclosures show where big institutional money, like Invesco's, is moving. It reflects their compliance, sure, but also their strategic positioning on specific stocks. It's part of the market's plumbing.
Following the smart money, so to speak.
Kind of, yeah.
Right.
It adds to the overall picture of market sentiment.
Lastly, private equity check-in. RCP advisors closed their RCP Direct V fund, beating their target.
Right, that's a positive sign for you, indicating confidence from institutional investors, particularly in smaller buyout strategies.
So money's still flowing into private equity despite maybe some public market jitters.
It suggests there's still appetite there, yeah. Investors are looking for returns across different asset classes, and PE remains attractive to many. It shows capital is available for deals.
Okay, wow, lots of moving parts. If we zoom out, what are the big cross-sector themes here? What's the connective tissue for our listener?
I think a few things really stand out. One, AI is just everywhere, driving efficiency, cutting costs across the board.
Definitely.
Two, those sector boundaries, they're getting really blurry. Tech meeting, pharma meeting energy.
Yeah, the pain reform example was wild.
Right. Three, you've got this dual track in energy, the traditional players adapting, alongside this huge push in renewables and battery tech, like with Alevra.
A real transition happened.
Absolutely. Then the financial sector is busy managing risk, facilitating these deals, providing advice, and underlying everything is just how connected global markets are now. What happens in the UK analytics market or with tariffs, it all ripples outwards.
It really does feel less like distinct sectors and more like an interconnected web, with tech as a major thread.
That's a great way to put it.
Yeah.
Which leads to that question the briefing posed. Are we looking at a bigger economic recalibration here, driven by policy, tech, global shifts?
And if so, what does that mean for you, the listener?
It means needing to be nimble, adaptable. Understanding these forces is key.
That Trump comment about accepting short-term pain for long-term stability, it's a reminder for our listener that policy choices have real trade-offs, right?
Exactly. It reflects one view on economic management. Sometimes you take a hit now to avoid a bigger one later. Understanding those philosophies helps you anticipate market reactions.
And Marin, on tariffs, it forces you, the listener, to think, okay, where do these costs actually land? Does it hit corporate profits? Does it hit my wallet at the checkout?
Those are the practical downstream effects. It moves from high-level trade talk to potentially impacting your cost of living or the performance of companies you're invested in.
Thinking about CRISP again for listeners invested in maybe more traditional analytics firms, how do they compete now against these bigger integrated data players?
That's the strategic question for those companies and for you as an investor watching them. Do they specialize? Do they merge? Do they innovate differently?
And pain reform jumping into energy. It just opens your mind, doesn't it? For our listener, it's like, okay, what else could happen? What other unexpected partnerships?
It encourages looking beyond the obvious, considering those unconventional growth stories.
So bringing it home for investment strategy, diversification seems even more complex now. It's not just different sectors, but understanding how tech links energy and healthcare, for example.
That's a really crucial point for you. Diversifying across these interconnected sectors could be a way to manage volatility in this evolving landscape.
The briefing called it a thoughtful evolution of the markets, adapting.
Yeah, the market is always adapting. It's messy sometimes, but it's constantly processing information, reacting to geopolitics, technology.
I like the reality show analogy too. Always unpredictable.
Mm-hmm. Yeah, it keeps you on your toes, that's for sure. Never a dull moment.
And that analyst speculation about moderate growth potentially following these adjustments, it leaves you wondering, right? When do these shifts potentially lead to a sustained upswing?
That's the million-dollar question for everyone, isn't it?
Yeah.
Timing that inflection point. Watching these trends we discussed, AI adoption, energy transition, policy shifts. That's how you, the listener, can try to get a sense of it.
So, key things for listeners to mull over: exposure to tech and energy leaders, positioning around geopolitics, and what's happening in private equity.
Spot on. Those are critical areas to consider in your own planning right now.
Well, this was great. A really good deep dive. So, quick recap for everyone listening. We saw those softer market opens, some crypto volatility, political and policy talk continues to be a major influence, lots of corporate action blurring sector lines, tech, energy, healthcare, finance, all mixing it up. And that theme of global interconnectedness just runs through everything.
Absolutely. And looking forward, for you, it's about staying curious, understanding how tech and sustainability are reshaping investment landscapes, and watching how policy unfolds.
Couldn't have said it better. Thanks again for joining us on the deep dive. And thanks to Pantheon AI, your information co-pilot, for the analysis that makes this possible. We hope this helps you feel a bit more informed, a bit less overwhelmed.
Definitely. Keep asking questions, stay strategic, and keep exploring these trends. They really are shaping our world.
Have a productive and thoughtful day, everyone. We'll catch you on the next deep dive.
And just one final thought for you to chew on. With technology increasingly bridging gaps between industries like pharma and energy, what truly unexpected future partnerships or market disruptions seem most plausible to you? And, more importantly, how might that kind of shift impact your own long-term investment view? Something to think about.